If you don't understand market structures, you don't understand price. And that's why most traders lose money. In this series, I'll simplify market structures step by step so you can finally read the charts like the pro that you are. Hi guys, Stealth here and welcome to my YouTube channel. So hi guys, in this series we're going to be talking about the market structure part 1. And this series is not just for beginners alone, it is also for pro traders and intermediate traders. So what exactly do we understand by market structure? Market structure is just the framework of how price moves in the market. It is the pattern price creates when it moves upwards, downwards, or sideways. And we have two types of market structure. The first one is the trending market, and the second one is the ranging market. So I'm going to draw a quick schematic of what a trending market looks like. Market does something like this. Right, do something like this. Yeah, if you see something like this is what a trending market looks like, right? So once market breaks this particular eye right here, we call this a break of structure. For the beginners that have no idea what that is, this is what a break of structure looks like. It's just a break of a particular eye in the market structure series, right? It's just a break of a high. That's simply what break of structure is. Don't have to stress yourself about it. So if market breaks another high, this is also a break of structure, right? This is another break of structure. Same thing happens over and over again. So in this particular trending market keeps making higher highs and higher lows. Let me put it there so you know what I'm trying to talk about. This particular place, we call it higher high. Yes, this particular high right here is the higher high, and then the low created there is the higher low, because price is coming from this higher point to this lower point, and the same thing repeats itself. Higher highs, higher lows, higher highs, higher lows, higher highs. But then the very moment price breaks this low, and then the overall trend changes, then this is called a change of character. They call it CHoCH, a change of character. Price was initially going up, creating higher highs and higher lows. Higher highs and higher lows, higher highs and higher lows, higher highs. But automatically, price broke this structure. Initially, this particular low is meant to hold. But then price broke the structure to the downside. So the break of that structure is just a change of character. Price was initially moving in an uptrend, right? Automatically it gave us this downtrend, right? So that is why they call it a change of character. The character just simply changed. That is just it, simple and straightforward. So what happens once the character changed? They call this a break of structure again, right? Because that structure has been broken to the downside. A break of structure, another break of structure. That is just it. Nothing at there. I'm not trying to complicate anything for any of us. So, and in this case, instead of it giving us higher highs and lower lows, it gives us lower high. This place, this is a lower high. That's what represented as LH, lower high, right? And then this particular part is the lower low, right? Same thing here, lower highs, and the low there is what? Lower low. I wouldn't want us to waste much time on this particular one because it is quite easy and straightforward. So this is the trending market. In this case, the up part of this is the bullish trend, right? This particular part is the bullish trend. Then once price changed character, it changed to a bearish trend. Easy and straightforward. So I wouldn't want us to like waste so much time on it, because it's quite easy and straightforward. Then going to the ranging market. The ranging market, from what the name implies, when the market is just ranging, is doing something like this. It's not giving us higher highs, it's not giving us lower lows, it's just doing something like this. The market just keeps consolidating, right? This is what a ranging market looks like. So it just giving us higher highs and higher lows, lower highs and lower lows, all in a particular range. So this is a range. That is why it is called a ranging market. So as an intermediate trader or probably a beginner, beginners are always advised not to trade in a ranging market, because they might not easily get their way around this. But trust me, I am going to like explain even how beginners can take trades in a ranging market. Forget all the things you might have heard about ranging market. In fact, even trading in a ranging market can even be easier than you think it is. So in this series, I would even explain to you how you can trade in a ranging market. So this is just the trending markets where price keeps making higher highs and higher lows, and the other one is the ranging markets where price just keeps consolidating. So let's just go straight into the chart and look for live examples. Yeah, so this is Euro USD 4-hour chart, and I'll be showing you the trending markets, examples of trending markets, and then the ranging markets. So let's start from here. The market broke this particular high right here. That is a break of structure, BOS, right? Same thing happened here, a break of structure. Same thing happened here, a break of structure. Easy and straightforward. You can see the market keeps making higher highs and higher lows. Same thing right here, a break of structure. Easy and straightforward. But then if you notice, when price got to this place, the lowest low that was here before price created its highest high, price broke it to the downside. Instead of calling that a break of structure, that is what a change of character. Price simply just changed character from it being bullish, and that is the bullish trend, into a bearish trend. So that's right there is a change of character. So after the change of character, what do we see again? A break of structure, right? That's a break of structure right there. Same thing happened again. A break of structure still, right? Break of structure. But then guess what happened again? Because price broke this highest, the lower high here, we do what? We call that a change of character again, and then price started moving to the upper part of the chart. So call that what? A change of character here. And that is how it happens over and over and over again. Can you see this is the bullish scenario and then the bearish scenario? This is the bullish scenario. Price was going higher highs and higher lows. And then in this case, price did what? Excuse me. This case, price was giving us lower highs and lower lows. Easy and straightforward. So let's move into the ranging market. Let's look for one. A particular scenario where price was just ranging. Right. Okay, I think this is a good one. If you realize what price was doing here, it wasn't exactly giving us higher highs and higher lows. Price was just doing something like this. Sorry, please. Price was just doing something like this. Going highs, giving us lows, doing this, doing this, doing this. Price was actually not giving us a trending market. It was just ranging. So even though we were told not to trade as a beginner, we were told not to trade in a ranging market, but then in this series I would give us a framework of how we can even take good trades intraday, even in a ranging market. So stay tuned to the very end of this video. See you on the second part of this video. Thank you.